Hi, welcome to Blue Light Software. We're here today to give you a live demo of our program. We're hoping to capture some signals and be able to show you those live and how they work with the uh, envelope and the histogram and the entry-exit lines. And unfortunately, we just missed this signal as as we were trying to set up the recording. So these files can only run about 10 minutes. So we'll see if we get another signal, or at least we'll see how this signal does. It's an up signal, multiple bar up signal. So that says between one to 5 bars, the signal should go up. The price of the stock should go up. So we'll see how that works. Now, if you're an aggressive trader, which means you're willing to assume a little more risk, you would have gotten in on this bar at the close. If you're a conservative trader, you would have waited until it closed above the buy line here in the direction of the trade. So looks like you would probably be getting in on this bar. We'll see here in a minute, but it closes above that. Yeah. Look, we just got another signal. This is great. So, yeah, we'd have probably gotten in back here somewhere. If not, we'd be in, but you get in now for sure with 2 up signals. One thing that concerns me here is that we've got a tall bar here on the histogram that's white and green, and this one's going above the line, the envelope line here. So we might get a couple of down bars before this starts going up. Let's just watch it and see what we get here. See, our other trades were good. This one was down, it was good. This one was down, it was good. This one was up, and that was good. Got a couple strong up bars here. Now again, this is above the line, and you got green, tall green, and white bars here. So if I'd gotten in back here, I'd probably go ahead and get out, because I'm pretty sure this price is going to turn around here in the next bar or two. If I'd got in here, I might have gotten out here. Again, you would get out when it hits this max line, or here at this, when it comes back down at this point, you would have got out at this point. So you'd be getting out by now on this. Alright, so this is a real strong uptrend here. One, two, this is 2 bars. After this bar, this is 2 bars, but it's still going up. So again, it crossed through the max line and then came back down to it. So you would have got out at that point. And we did it again. So if you missed the first chance, you'd be clicking fast to get out of right there. So it's a very good example. Okay. So if we'd have got in as an aggressive trader on this bar, we'd be making some money. you got in on this bar as an aggressive trader, we'd have made some money. But again, it looks like with these tall white and green bars and being above the envelope here, we know that it's going to come back inside this envelope either on this bar or the next bar. So, and that's confirmed by these white and green lines. So we would be wanting to get out of that. And sure enough, look here, it's coming back inside the envelope. Now this is a multiple bar signal, so if you were willing to assume a little more risk and didn't want to take your profit right away, you could just wait for a couple of these down bars, and if the overall trend for the day is up, or the current direction of most stocks are up, then at this point of the day, you may just let this. You may stay in and let this go down a couple of bars, and then it may turn and go back up. So when you get out depends on your level of risk. See that you're willing to assume. And here we no longer have white and green, so now this stock is able, according to our tools, it can go up just as easily as it can go down. So we'll see what happens. Let this run a couple more minutes. See what we get here. And this would work the same way on any of the time frames. We're on a 1 minute chart, but just so we can try and catch these signals and stuff. But this would work on the 5 minute, 15 minute, 30 minute, 60 minute, daily, or weekly charts. And again, when you get in and get out of these things, a lot of it depends on how much risk you're willing to assume. I personally, on this trade, I probably would have gotten in on this green bar, being a little more conservative. And on this, if I'd have waited and got in on this one, I'd have got in on this bar because it's so strong, showing which is probably an uptrend coming. And either one, if I'd have got in here or here, I'd have probably got out at this point again, because there's 2 bars above the envelope, and the green, the number of green and tall green and white bars here. Both of those are indications that the price is going to go down. So, being a conservative player, I would have gotten out on this bar, and that would have been good. It looks like, but how long you stay in? Again, if you'd have stayed in this, there's a good chance it's going to go back up. There's no down signal yet, so, but that would be another indication to get out of the trade is if a down, remember, one of these down signals, either next bar or a multiple bar down signal occurs, you would probably want to get out of the trade. You can also use your other tools, Fibonacci, Elliott waves, support resistance, on multiple bar signals to help you determine when to get out of a trade. So, not limited to our BAS tools, but they're very, very powerful in themselves, as you just witnessed. Okay, well, again, I don't want this file size to get too big, so I'm gonna stop this demo and try and capture another one. So again, it looks like at this point in time, getting out at this bar here would have been your maximum profit. You don't know whether this is going to turn around and go back up or not, but yeah, it looks like it might. We're starting to get a little red and yellow means that it's going to go back up. So again, just don't have the time to follow this for 10-20 minutes. So Yeah, it looks like it's going back up. So if you had some tolerance, risk tolerance, and had your trailing stop or whatever you use, your risk reward ratio wasn't met here, your stop loss wasn't met, this is liable to go back up some more. So anyway, that's I'd like to watch this, but we got to go. So thanks for joining us, and watch another of our demos.